Hey, good morning, everybody. How's everybody doing today? All right, it's Friday. Yay! We made it through the week, right? Right. It's been a busy week for us. We've been working on getting ready to go to our first high school rodeo this weekend. So just lots of packing, had to de-winterize a trailer. And, gosh, guys, it hasn't even really been warm enough to really even want to de-winterize it, but we kind of came down to the point where we just had to. Like it is what it is. It's got to go. So, I mean, we had even a hard freeze the other night. So, yeah, and we're at the end of April, almost the beginning of May. I mean, today is the 29th of April. Tomorrow's the 30th. The first is on Sunday. So we are headed into a new month, and we haven't had the weather to even feel like we're even approaching May at this point. So, all right, guys, we're going to jump into it. Remember, you can win things with me. All you have to do is like the video that you're watching. That's it. And then I will announce that every Tuesday. Okay. And then, you can ask questions about real estate, about financing, about credit, whatever you need help with. Okay. Whatever you need to have questions answered on. Okay. So go ahead and like that video that you're watching, and that'll get you entered for next week's drawing. All right, guys. This is a big question for a lot of people. How credit score influences the interest rates, okay? How does your credit score influence your interest rates, okay? Well, I mean, I'm going to call it out, okay? So, higher credit score, lower interest rate because you're less of a risk. They feel as they look at the numbers, you're less of a risk. So when you're going to get a mortgage, okay, you need to think about that. The higher the credit score, the lower the interest rates. And as these interest rates are climbing up, guys, it becomes more and more important that we keep our credit scores high, or we work on getting our credit scores higher, because as the interest rates are going up, so are the cap of what the bank is feeling that they need for the lowest interest rate that they can take. All right. So if you haven't heard me talk about this before, banks typically will have a set standard for everyone. Okay. They are going to have a set of rules that will say they're only going to use, what do you want to say? A credit score that they feel, a lowest credit score that they feel is going to make it. They're going to use things that go in, in this nice little box, so they're going to have a set of rules for you that's going to fit in this nice box. So they can sell off these loans and say, okay, well, we have nobody under a 620 credit score. Okay. So what that does is as the interest rates start climbing higher, that low credit score will have to go higher as well, because as they are, you become more of a risk with the higher interest rates. Okay. So if you see how that works. So guys, this is no better time than now to get on and to start reviewing your credit score. See if there's anything on there that you need to have, cleaned up to get your credit score a little higher, especially as we start getting higher interest rates. Guys, these higher interest rates are not going away anytime soon. I'm just going to tell you that. They have been so low for so long. Economically, they have to go higher. Okay. And that's just the way that it works. All right. So you might as well buckle up because these interest rates are going to go higher. Okay. So anyway, keep that in mind as we start pushing forward. Sorry. Keep that in mind as we start pushing forward, that as the interest rate go up, the credit score limit is going to be higher to get a good credit score, to get a good interest rate, excuse me. So that's how it affects, because you are going to be more of a risk. The lower your credit score, the more of a risk they feel. So the higher they'll make their interest rate on your loan. You may still be able to get a loan. I don't want to discourage anyone from not trying to get a loan, because you may still get a loan or a mortgage, okay? But you just may not get the lowest interest rate. So right now, I believe as of today in April of 2022, okay, interest rates are running about 6%, a little higher, a little lower, just kind of depends on where you're at, all right? So, if you say you have a 580 credit score, you may get financing with a company, but your interest rate is going to be higher than 6% than the average. Okay. That's just the way it's worked for years. Okay. What does that say for your overall mortgage? Right now here, guys, that higher interest rate is only adding a few dollars to your payment every month. It's not really adding a ton of stuff over the next, however, it's not adding a ton over your monthly thing. Okay. When we start bumping over 10% interest, that's when it really starts getting kind of astronomical. That's when you start feeling like you're putting a mortgage on a credit card, right? Because, credit cards are 22, so then once it gets over that, then yes, it is more of a significant amount. But right now, it really is just a few dollars extra on your payment every month. So anyway, guys, I hope this helped you guys kind of clear the way a little bit. Guys, just remember, jump into my group. It is free. The link is on the description of whatever video that you're watching. Pop in there. Hope you guys have an amazing weekend. I look forward to seeing you guys all on Monday. Have a great day.